Hello traders, welcome to our weekly outlook for the week of February 13th and February 19th. So right now we are right at February 13th, Monday, 8:30 a.m. Eastern Standard Time. We are just an hour away from the Wall Street opening. The whole London session was very quiet as usual. It's a very quiet Monday morning, and there were no tier 1 data to drive the market. So I just decided to the video is a little bit late. I apologize for that, but just decided to give you a recap about what's going to happen for this week, and then we'll be back after the next agent sessions. So first recap from last week. So last week, the major fundamental catalysts were the RBA rate decision and the Chinese trade balance and the RBNZ rate decision. So if you have been following through my video, you pretty much know the result, but I'm just gonna quickly go over the RBA rate decision and policy. Basically were much hawkish than people's expectation, so we saw a lot of buying into Australian dollar. The Chinese trade balance was also a large positive surprise. That also fueled up the global demand and especially helped the Australian dollar also. We also have the OPEC release a new report on their agreement, and basically they have reached this agreement more than before. The January the last time was 80% as reported to their target. Right now they have already reached 90% and 92%, and this is very significant because OPEC, as mentioned, members had known been cheat and have no integrity in the previous agreement. So this is really the first time we saw a large cooperation between OPEC members. We also saw a large curb for the oil supply, and that means it's really a strong sentiment that producers are determined to push the oil price up. So as mentioned before, $60 per barrel was the minimum price that people were looking to target. Right now, we are very much might go over that. Now, of course, that on top of this, we also saw a positive employment data from Canada, along with last week's positive GDP. This has really, again, complete the picture of Canadian dollar right now, the internal strength of Canada, plus the external micro element of the oil market has fueled up this strong sentiment and fundamental strength for Canadian dollar. The biggest risk, of course, is a NAFTA deal between Canada and US. And Justin Trudeau, the Prime Minister of Canada, is going to meet Donald Trump, and it's going to White House this Monday. We don't think they are going to discuss the NAFTA deal yet because I think the cabinet of the trade minister for US it hasn't been decided yet, but definitely they will talk about NAFTA deal. So for Canadian dollar right now, if the NAFTA deal turns out to be positive, then you can really go ahead knowing that this currency is quite strong. However, the NAFTA deal will be the major catalyst for Canadian dollar's future. So we have to really pay attention to that. My personal view is, of course, based on what happened between Japan and US this weekend, Trump meeting with Abe, I think there's a tendency for Donald Trump to really talk tough, but work more smoothly. So whenever he likes to make comments, always more harsh toward other nations. But you gotta look at the real policy from the fundamental perspective that Japan has been such a long time allies for US, pretty much the strongest allies US has in the Pacific area, Asian Pacific area. So of course US is not going to ruin that relationship. Now same thing as Canada. Canada has been such a strong allies for US. They are the most strongest northern neighbor for US. So of course US is not going to ruin this relationship over a deal. So I understand US want to renegotiate NAFTA, and it will be renegotiated, but it's not going to be such a losing situation for Canada. So if that catalyst can be minimized, then we along with the strength from oil market and internal economic strength from Canada, then we will expect the Canadian dollar to continue climb up higher. The RBNZ meeting from New Zealand last week, of course, came out as very dovish. Basically, the central bank talked down their currency, and the market was very disappointed because they were expecting a hawkish talk. Now, this I have to always mention that you look at this as a sentimental event, but in terms of the fundamental strength, exactly where is New Zealand dollar is. And I think New Zealand dollar is still quite strong based on their positive GDP, positive inflation, and positive employment. So there's really no fundamental bearish element to drag New Zealand dollar down according to the data we have right now. So if you keep that in mind, then you'll know that this short-term downside movement for New Zealand dollar might be short-lived, especially when you pair New Zealand dollar up with other currency pair, such as Japanese yen and Swiss franc. So I'm still personally very bullish in terms of New Zealand dollar. Of course, timing is very important because sometimes you get in the currency with the correct fundamental picture, but you getting with the wrong timing and you got caught up. And that was what happened to me in my previous trade. Dollar yen, euro yen, and New Zealand dollar. I got in pretty much in the right fundamental direction, but a very terrible timing. And that's what I've been working on right now, to how to incorporate with the general direction and finding out a better execution for my trade. So that's pretty much what happened last week. We saw another risk on sentiment to finish up the week. US dollar market closed at record high on last Friday, and dollar regained strength. Basically, all the commodity currencies had regained strength. So Monday we opened right now again 8:30, 8:40 a.m. Eastern Standard Time. The whole London session was quite neutral. There was no particular activity, so I couldn't really say where is the market right now, because any up and down is not significant enough to tell you where the risk sentiment is. But basically, we are still continuing our risk on sentiment from last week, unless we have any major risk events to pull down the market. We did have the North Korean missile launch over the weekend, but that's not drastically enough to diminish the market confidence. So, preview for this week. What's about to happen this week? This week is full of sentimental issues. It's more than the last week. We have a lot more fundamental data coming up. We also have, the most important thing is the Federal Reserve Yellen is scheduled to speak and testify this week. So she's going to testify in front of the Congress, and this is the very first time she did it. She's going to do it in 2017. So that will be a really important catalyst, because many of you know there were a big conflict between White House and Federal Reserve, especially Donald Trump wants to weaken the US dollar, while Federal Reserve is set to raise the interest rate, which is going to inject a lot of strength into US dollar. So that was the biggest conflict. Last week, we also saw one of the Federal Reserve officials resign, and that official was put in by the Obama administrations. It was a quite significant event, because right now Donald Trump can point another official into the Federal Reserve. Janet Yellen, her term is expired in 2018. That means in Donald Trump's next 4 years, he has a lot more maneuver to put and appointed new officials into the Federal Reserve. So you gotta start wondering whether Federal Reserve still have the integrity to be independent. And the White House agenda is very clear. They don't want the US dollar to be too strong, because that will hurt the trade balance for US. So a lot more to come, politically speaking, but just understand this week, the Janet Yellen scheduled to speak and testify will be a market mover. We also have, again, Justin Trudeau from Canada meeting Donald Trump, and we might have more comments from this weekend's meeting between Japanese Prime Minister Abe and Donald Trump. Let me just pull out real quick of the economic data for this week, because I didn't really write it down. I will update all the tradable events on my sheet later on, update in my website. If you are interested to trade a risk events, you want to know the maximum number and minimum number outside deviation, you can do so by visiting my website and see the numbers. Now, the deviation is very important for me, because I'm only looking to trade a risk event when I have deviation. That means I want the market to move on top of this surprise. Because sometimes if you have, for example, preliminary GDP 0.2% for Japan on Sunday, right? It's not a big mover because it's not outside deviation. So although it's negative than the forecast, you are not most likely not going to see a huge move in Japanese yen, and that was what happened. We didn't see much movement in Japanese yen. On the other hand, if the expectation was 0.3 and you have something that is like 2%, that is way positive than the expectation. You're going to see large buying power into Japanese yen. So for me, trading risk events is always depend on these deviations. That will increase my probability tremendously, and that's why I do not trade a risk event when I don't have a deviation. Sometimes market will still move, but for me, that's not a high conviction trade. So I will put on my sheet later on after I finish this video. So this week, let's take a look first. Today, Monday, again, nothing happens here. We will have the Chinese CPI and PPI at Asian station. Now, this is going to be important, especially for Australian dollar and basically the general risk sentiment of the market. Now, expectation was positive than before, and I do expect to see a much positive number based on previous trade balance, previous GDP data from China. They were all quite in line or more positive than expectation. So I do expect a positive CPI and PPI. Of course, you never know what's gonna come out. So if it's fixed expectation, the risk on sentiment is most likely to continue for the beginning of this week. If, however, we have a negative data, then the sentiment will shift, and then we will see what's going to happen. Another thing about the sentiment is that it's hard to trade the risk sentiment. Now, every time I do the video, give you this risk sentiment, just to give you a general picture, I personally don't trade this kind of risk sentiment, especially in a daily trade. I might do it in an intraday perspective. The reason is because risk sentiment changes not only every day, it changes every moment. A big risk event can completely turn the sentiment upside down. So if the CPI data later on in Asian session is a big negative deviation, you will see an upside down of the risk sentiment. And that's why I don't like to put a trade on top of the sentiment, especially if it's not a short-term trade. Tuesday, German preliminary GDP is not tradable for me, but definitely will set a tone for euro dollar. And then we have the British pound CPI. This is tradable for me. I will definitely like to see a deviation before I pull out the trigger. The bias is to the upside. Very simple reason is because British pound has been devaluated ever since Brexit. It lost about 17 to 20% of value. That has reflected into the inflation, because now the money becomes cheap, so the product become more expensive. So we will expect a higher CPI data, and this is not necessarily bullish for the pound, but it definitely will cause some short-term upside movement, because people know that from that Bank of England meeting, Carney did mention that Bank of England will not tolerate a high sustained inflation. That means if inflation keep going higher to a certain point, Bank of England will have to hike the interest rate in order to control the inflation, and that will make a British pound become a more high yield currency, will give it become more attractive to buy. So this is something I will trade if we have something outside deviation. And then we have flash GDP quarter to quarter from Euro. Not something I will trade, but I will take a look at it to depend on the market general direction for Euro. PPI at 830, this is also tradable for US dollar only if we have something outside deviation. Same logic, if you have a higher PPI, means that the Federal Reserve will have to hike the interest rate sooner than later, and that will make the US dollar become more attractive as a high yield currency. 10 a.m. you have the Fed Chairman Yellen speaks. This is very important to move the US dollar. So if you are trading any currency prior to this kind of event, I definitely suggest you to move a stop loss to break even if you are in any sort of US dollar trade, because this can't completely change the direction of US dollar. Wednesday have the average earning and climate account change unemployment rate for British pound. Again, it is tradable outside deviation. 8:30 New York time, we have manufacturing sales CPI, core CPI from both Canada, US. This is also tradable. And then once again, Federal Reserve Chairman Yellen is going to testify in front of the Congress. This is definitely a big mover event to trade. Then you have the crude oil inventory. If you are in Canadian dollar, watch out for this event. Finally, at Asian station, you will have the employment change from Australian dollar. This is also tradable, but I personally don't trade Asian station for a very simple reason that I need to have a time outside trading myself. So I'm not a machine. I don't work 24/7. So since I'm already trade through London and New York station, most of the time I don't trade Asian station unless it's an interest rate decision. That's the only event I will trade, or unless it's like a voting, election or referendum. Those are the special events. Otherwise, I generally don't trade through Asian station. I know a little bit ironic since I'm living in North America, New York time zone. But for me, I like to get into a trade with the most action, which is generally the London and New York station. Thursday, you have the building permit, manufacturing index, and unemployment claim. Important data, but not tradable for me, so not going to do anything about it. Retail sale quarter to quarter from New Zealand dollar. This is more tradable for me. I will trade these events if we have anything outside deviations. Finally, Friday, we finish with a retail sale from British pound. This is also tradable for me. So again, not too excited, but definitely more events to trade than last week. And looking at a micro perspective, watch out for Chairman Yellen, especially she is going to speak twice. That is going to be a lot of a very important catalyst, not only for US dollar, but for the general market. Monday, the meeting between Donald Trump and Prime Minister Trudeau, that will be a mover for Canadian dollar, so be careful for that. Take a look at that. Okay, so let's continue for my weekly perspective. Right now for Euro dollar, I'm still holding a fundamental and sentimental bearish view. The reason is very simple. Last week, over the weekend, we have a new elected Germany, a new elected president to take office in March. Now, this president is in a different party than Angela Merkel. And it just shows you that Merkel is really in a very risky situation right now, that she is losing a lot of political strength compared to previous years. So you know that she has already been attacked by this refugee crisis. And this election, although a lot of polls think that Merkel is going to be re-elected, but the thing is that it is a more rough path for her comparing to the previous election. So there is still about 7 months to come, and you just don't know what is going to happen. This is, I would definitely, especially right now during, after all this recent populist movement globally, I definitely wouldn't speak about a political event as confident as I speak for a fundamental event, because for fundamental data, it's more easy to predict. It's really based on the mathematics, consumption in terms of GDP, things like that. But political events, it's very emotional. I understand the market can always be very, very irrational. The moment that people vote, sometimes it's just completely bizarre and outside your calculation. So I would definitely not say that, it's no way Merkel will lose the election. The truth is, I don't know. I think she's going to win, but I don't know. I cross my finger. The reason is because if Germany vote her out, and that will again be very, very shaky for the whole Eurozone. Now, French election continued to create a market sentiment as well. As I mentioned last video, that Le Pen is taking the lead in the poll. The only certainty right now is you keep hearing people say, yeah, she's going to win the first round, but lose the second round. And my question is always, how do you know? The thing is that nobody knows. This kind of poll has proven to be completely irrelevant for the last year events. So we don't know what's going to happen. But French election is going to be a shaker and mover for the market, and especially euro dollar. Fundamentally, ECB over the weekend also made comment that they have no plan to change their current strategy. Basically, they hinted that they are going to keep the QE program. They are going to do everything as planned until the end of this year. Now, this was a surprise, a bigger disappointment for Germany, because Germany, a lot of official economists was hoping ECB to finish the QE as soon as possible, because they don't want the inflation they don't want this low rate market to hurt their savers. However, that's not the policy for ECB. And as long as ECB continue to keep the low rate market, the euro will continue to be a fundamentally bearish currency. On top of that, the political unstableness will create another fresh bearish sentiment for the euro. So for this week to come, I'm still holding a quite bearish view for euro. For US dollar, same picture. You have the fundamental bullish element from a lot of very positive fundamental data. Sentimentally, this week it's a little bit neutral. Remember last week we said it's a bit bearish because of Donald Trump's travel ban, the comments and executive actions, and attacks, especially the attacks to other countries, Japan, Germany, and China. Now this last week, not only he had met with Japan Prime Minister Abe, the thing is that meeting was very friendly. There was no mention about Japan being a currency manipulator. There was just everything is very, very good. And on top of that, he actually finally made a phone call with China Prime Minister Xi Jinping and agreed that the US is going to back up this one China policy. And it's very possible from a lot of analysis that he is going to basically work with China in order to control the North Korean crisis. So it's really like a deal for Donald Trump. He is going to be previously used Taiwan as a chess for his deal, but now he needs to control North Korean and maybe even have a better trade deal with China, or have a better trade deal over a South Asian Sea crisis. So those things taking more precedence than a Taiwan independence. So that, of course, will be very positive sentiment for the whole Asian Pacific and US dollar itself. So this week, really another risky event will be a more domestic event. Travel ban, executive order, this will be more a bigger event. But domestically, what's going to drive US dollar is the tax plan that the market is expecting to be a completely reform, a lower tax rate, especially for the corporation tax. And that will all be very positive for US dollar. Now, we don't know, everything is just speculation right now, but US dollar does have a very strong fundamental bullish element. So as long as we don't have the sentimental bearish element, then US dollar will revert back to become a fundamentally and sentimentally strong currency to buy. So we are, at least for now, putting our buy into the US dollar. For Canadian dollar, I think it's a fundamental and sentimentally bullish currency as well. As I mentioned already, you have a positive GDP, positive labor market, and now you have a pretty good inflation data. On top of that, you have the continuation strength from the OPEC member into the oil market. This is all going to be a very, very good reason to push Canadian dollar higher. The risk events will be the NAFTA deal between US and Canada. And we personally think this deal will not turn out to be as bad as some people expected, for the very simple reason that US needs Canada as much as Canada needs US, not only in a trade deal, but in terms of anti-terrorism, in terms of basically just working together, since they are virtually neighbors geographically speaking. So I don't think they will ruin their relationship over a NAFTA deal. This week, we also have the official sign between the EU and Canada. They are signing a very good trade deal for the first time, and that will be a very good positive event for both EU and Canada. So if that happens, that will definitely give more positive sentiment for Canada. As I mentioned before, Canada has really a lot of risk for if the NAFTA deal goes wrong. The reason is because 70% of output export from Canada is all into US. So if Canada can expand their exporting business, then of course they will have less to lose on the table when renegotiate with US. For British pound, I don't really have anything coming up. Last Friday we did have a large positive event, but if you took at the market, which I'm going to show you, we don't really have too much movement from British pound. And the risk from the Brexit and the updates is still there. British pound is continue to be a fundamental and sentimental neutral currency. So it's really depend on what's happening to the news, and most likely a lot of the pound movement are short-lived. So you have a lot of up down movement. That is good for intraday trading, but it's not good if you want to hold it for swing. So personally, I don't have a particular movement for British pound. Fundamentally speaking, it does have a little bit bearish outlook, but then again, if you see a large inflation, that means we will have a better possibility for rate hike, which will be a more bullish element for British pound. So again, British pound for me is just, let me type it down, fundamentally neutral and sentimentally neutral as well. So I don't really have any particular direction for British pound. For Australian dollar, for now, I think it's fundamentally bullish and sentimentally bullish. Now, I already mentioned last week, the RBA, basically what happened to Australian dollar is that RBA backed it up strongly. So if you're just looking at data itself, of course, there's a still a lot of risky reason to not buy Australian dollar. First thing is that the last GDP contracted minus 0.5%. That is very strong data when the GDP contracted, right? GDP can maintain, it can not go anywhere, or it can be lower than expected, but when it contracted, that's a terrible sign. So fundamentally speaking, the labor market was also soft. Inflation was also soft. So I was expecting Australian dollar to go a little bit in the downside, but RBA came out last Monday to completely back up Australian dollar. Now, since the central bank is so confident about their own currency, and since the central bank has so much tools to make the currency weak or strong, you have to go with their policy. Understand that policy really take over all the fundamental data and sentimental data. So that's why when I say Yellen is going to speak this week, it's sometimes more important than any kind of other events for US dollar. So Australian dollar, fundamentally, it's very strong because you do have a better trade balance. The commodity price continue to support Australian dollar. Sentimentally, it's also very bullish because the central bank itself has backed it up strongly. So as long as these two elements continue to be there, we will expect Australian dollar to remain strong. New Zealand dollar, on the other hand, is fundamentally bullish, sentimentally neutral. The New Zealand dollar actually have a better fundamental data than Australian dollar. Again, we mentioned they have a better GDP, better inflation, and better employment data. However, their central bank was very dovish last week, trying to talk down their own currency. So this is where the divergence comes in. It's sometimes it's hard to trade because fundamentally you can buy it knowing that you are in the right direction. However, you might be in the wrong timing. You might be in the wrong execution. And I certainly got caught up last week. So sometimes you have to understand that's the tricky part. And that's also the efficient part about technical analysis. Is you want to get in, but you also want to get in with the trend. So I am still bullish about New Zealand dollar, but just be careful because the sentiment might still remain to the downside or at least just neutral. Now, for Japanese yen, as I already mentioned, it's quite neutral. Of course, you have a better sentiment from Donald Trump and Prime Minister Abe's meeting, but Japanese yen still remain a fundamental bearish currency. As I mentioned, the central bank needs to keep the currency weak in order to help the export business. Sentimentally, it's still neutral because any sort of global risk events will push yen up. So watch out for the North Korean missile launch. Again, market is very calm right now. But let's just say if that missile accidentally hit, South Korea or Japan or even China, that will be, we might have the war, because according to the defense agreement between Japan and US, whenever Japan is attacked, US by contract has a contractual obligation to support Japan's military response. And Japan would definitely respond in a military sense if their main island is attacked by a foreign force. So I understand these kind of events, it's very likely to happen if the country, originally intentionally maybe just trying to show up their power, but if they mess things up, that we might have the war. It's not a world war just because North Korea is too weak to have the world war, but that definitely might happen. If those kind of events happen, you will definitely see a safe haven inflow, which is very beneficial for Japanese yen. For Swiss franc as well, exactly same position as Japanese yen, is fundamentally bearish and sentimentally neutral. So again, they will have to see what happened to the global risk events. Fundamentally neutral. The previous GDP, I already showed you, it was a negative number, but it doesn't cause too much volatility in the Japanese yen. The reason is because although it's 0.2 lower than the forecast, but this is a 6 consecutive growing GDP data for Japan. And that is a very, very positive news. Let's show you trading. Let me just show you right here. So if you take a look at Japan's, just give me 1 second, preliminary GDP data today. Let's see, where is it? Right here. So again, it was the 4th consecutive quarter of growth, boosted by export, government spending, and private non-residential investment. So again, even though it's a negative than expected, but it's a 4th consecutive growth for Japan. So that's why it's not necessary. When you look at this fundamental data, you have to look at the bigger context, right? It doesn't mean it's bad. That's why I say it's better to wait for deviation, because if you want to trade risk events to be a scalper, you want to have enough movement for the price action. Otherwise, you are just being stuck in a trade. So that's really give you the best probability. Even if I know a lot of traders are not fundamental traders, but they still like to trade bigger events like non-farm payroll. It is always work better in your favor if you trade data outside deviations. That will be the best case scenario. So let's take a look our. Sorry about that. Let's take a look at our trade right now. So first thing first, last week I took a bunch of trade. We got a very good signal daily trade. So let me just go over those first. I know it's not New York session wrap up, which I will do it later on after the next Asian session. But let me just quickly go over. We got in CAD yen previously because of this strong bullish candle. We did close Friday with this kind of a kangaroo tail. We have a little bit gap today, but we don't know. We might close lower. Just still early to say. It's only 9 o'clock. So we'll see what happened. But in the fundamental perspective, it's a very positive outlook for Canada right now. But again, Donald Trump is going to meet with Prime Minister Trudeau later today. That is going to be a catalyst for Canadian dollar. So I'm still holding this trade for now. Dollar Swiss is something I'm also in on top of this strong bullish candlestick, also at a very perfect zone, right just above this 200-day moving average. This is all more like a swing perspective. I'm also in dollar yen, and a very similar picture we got in here. Stop loss is just at this 112, 111.25, which is a very strong support area. and we might edge higher, we might continue to drop depending on where we're going. Nevertheless, if we're going lower, I will try again because we are closer and closer to a stronger and stronger support area. 110 is very, very important. It's right at this, right below this 200-day moving average, and this is just a psychological handle for a lot of people. Pound Aussie was something we also got in last week on top of this bearish kangaroo tail, also because fundamentally I'm still very favorable for Australian and I'm neutral for British pound. So we'll see what happened for this trade. I do hope to move stop loss to break even ASAP because, as I mentioned, British pound is quite volatile. So if things going against me, I might get stop out very, very quickly. So I do want to move to break even. Risk event trade, I took Euro pound upon a release. I'm still in this trade. I took half already because there's no movement from British pound. So early trade, this was what happened last week. I took a British pound, Euro pound short on top of the positive data of British pound. I basically short, I think, on this candle. This is hourly trade. So I short here. Again, you see I got a little bit drawdown and then it's going in my favor. And then basically we end up the week with no movement. So I hold it over the weekend because I still has more confident into British pound than euro dollar. After the weekend, we have a little bit gap down, and basically this is what happened during the last Asia and London session, and this is where we are right now. So I set the trade to break even already at 0.8515 right here. I don't really expect too much movement, but it might just keep going to the downside. If you take a look at daily, we are really, a little bit going down. So strong support is 84.70 and then 84.50 all the way until 84 handle. Well, I'll see what happens. It's a risk-free trade already, so I'm not too worried about managing this trade. I also took a trade of New Zealand dollar. I got in again long, and the reason is very simple. This is just a fundamental trade. Also, it's a hedging trade for me because I'm already long out US dollar for a lot of dollar trade. So I got in this short long New Zealand dollar, basically short US dollar trade. Fundamentally speaking, I still think New Zealand has a more fundamental strength than US dollar. This week is going to be a risky event for US dollar because Janet Yellen is going to speak twice. Now that might create any sort of risk sentiment to either upside or downside for US dollar. If we have any risk sentiment for US dollar, then my New Zealand dollar will be benefit, which also is going to hedge out my dollar long trade. So that's my basically my reason to get into this trade. So that's pretty much it for a daily chart perspective. Let's take a look at the weekly analysis for any of you that wants to hold a much bigger perspective. So again, weekly chart, I personally don't trade, but I think it's a fantastic way to trade, especially if you have other commitment like a full-time job, things like that. The good thing about weekly chart is you do it, first of all, once a week. Second thing is that you only look at two elements, fundamental and technical. And you are going to filter out a lot of worries of the sentiment noises. So many of you going to work or go out about your day every day, you hear people say, oh my god, the market is doing this and that. I understand that really has nothing to do with a swing trader, because if you are a fundamental trader, you really don't need to worry too much about these sentimental noises. The biggest virtue or the biggest personality that you need to have is patience. So if you want to trade a weekly perspective, you have definitely a lot of chance to be profitable at the end of the year. But you have to be able to be patient. You have to be able to not only patiently enter, also have to be patiently managing your trade and patiently exit your trade. So it's really for people who have that kind of personality, who also don't like to get nervous into this up and down movement. Because that if you feel yourself is very nervous to trading this kind of shortened time frame, then go ahead and try some more longer term perspective. You might find out it benefits you a lot. So let me get my weekly chart here. Okay, I'm gonna cancel this trade. All right, so let's take a look at the euro first. So first thing first, fundamentally, I'm bearish for euro, so I'm only looking for short opportunity. And euro pound, again, this is just fundamentally, I am only really looking to short euro dollar. And we do have a bullish candle. So again, this is perfect for you if you want to short euro dollar. What I'll do is I put my stop loss. There's few ways you can do it. You can use a weekly range, or you can simply use a swing high, which is right maybe just above here. If you want a more tight stop, just put above this 0.10874. Maybe you add 10 more pip to 10884, or if you want more conservative, you can put above 109, and your target can very well be, because right now we're at a historical low, so your target can be 1 to the parity. Not sure if we're gonna reach the parity, but parity means you have currency that is one-on-one, an equal currency. Not sure if we're gonna reach it, but definitely it's worthwhile for you to just don't say the target first, right? Just put it a little bit lower. But if you really wanna, you're very careful about your ratio, things like, then you can put a previous low at 1.361. Then you're still going to have a pretty, close to one-on-one risk-reward ratio. Not exactly, but again, we think this kind of trade have a much higher probability. So euro dollar, I will give a short signal if I'm a weekly trader. Definitely, it's looking to the downside, and you can avoid a lot of upside movement. Again, a weekly perspective, you might have this kind of movement, right? A sideway for 1, 2, 3, 4, 5, 6, 7. That's like 7 weeks. That's almost 2 months. So again, you have to have a patience to hold it. But look what happened after 2 months. The trade works out. So again, patient pays off if you can really work on it. Euro Aussie is also looking to short, but we are way below already, so we do need a little bit pullback. Euro CAD also looking to short. I don't have a signal here. Euro NUSD also looking to short. We have a contracted signal today, looking to go up. So that's not bad, because if anything comes to 1.55, that will be a perfect level for you to short. And that's pretty much it for Euro Yen, Euro Swiss, Euro Pound. I'm really not looking to do anything. For British Pound, I'm also really looking to stay out, because I don't have a strong fundamental direction. So unless I have a very, very good reason to short, like Pound Aussie, I'm not even going to short Pound Aussie, because for British Pound, again, it's just very hard to tell where it's gonna go. So I'm not really want to get into a weekly trade if I don't have a strong fundamental bias. Same as Swiss franc, Japanese yen, I'm just not going to do it. For dollar trade, I'm looking to buy US dollar. I know there's a lot of volatility created by Donald Trump, but as long as you look at a fundamental perspective, dollar, as long as the data continue to support it, it is still attractive to buy. So this week, we do have a strong bullish signal for dollar Swiss right at this nice support area. I will buy it. Stop loss, again, it's more of a personal choice. You can put at low at the previous candle. You can even put low below this 100 weeks moving average. If you are so conservative, you can put at 95. Right? I know it's like, oh, that's crazy, that's too far away. Again, you are really looking to hold this kind of trade for more like a weekly, monthly, or yearly perspective. Right? So just understand, if you put here, you are not going to worry about getting stop out, but you can always do an early exit if the fundamental has changed. So that's for dollar Swiss. Dollar CAD, I'm not looking to do anything because they both are quite strong. Dollar Yen, I'm also looking to long. Again, this is our current direction. We are really at this nice area, but we unfortunately don't have a signal here. So just, it is what it is. You can wait for a signal to get in. Australian dollar, also looking to the long. Aussie Swiss, look what happened last week. I remember I did give this trade call, but I have to go look at my video. Maybe I didn't, maybe I did, but I think this is a great trade. Look at that. You are at this 100 weeks moving average. Nice, strong, bullish kangaroo tail bullish engulfing, and now you're already taking off. So this is also a very good high probability trade for Aussie Swiss. Aussie dollar, I'm not looking to do anything in a weekly perspective, same as Aussie CAD, Aussie New Z. So I'm only looking to pair Australian dollar with Swiss franc or Japanese yen, just because you have a more of a logic way of fundamental in your side. Again, we have another nice kangaroo tail. We are really at these 3 long tails for the previous 3 weeks already. It just shows you one thing, that 85 is very strong, hasn't been breakout yet. Again, I wouldn't put my stop loss here. I would put maybe 83.75, and then just enjoy this nice ride up, because most likely Australian dollar is going to go up more than Japanese yen, fundamentally speaking. So CAD Swiss, CAD yen, I'm also looking to long. I don't have a signal here for CAD Swiss. CAD yen, beautiful kangaroo tail right here. This is very, very much a good trade for you to long. Again, you can put stop loss just below 85 and just trade this kind of long-term swing trade worry free, knowing that the fundamental is in your side with a nice technical signal for you to execute. New Zealand dollar, I'm also looking to long New Zealand Swiss and New Zealand yen. So New Zealand Swiss, I don't have a signal here. New Zealand yen, I don't have a signal here, so you have to wait. For New Zealand dollar, New Zealand CAD, I'm gonna show you, but I'm not looking to do anything about it because it's a very contradictory currency. They both are very strong, same as New Zealand CAD. For Aussie New Zealand, a lot of people like to long this currency. I definitely do trade this currency pair in a daily perspective or intraday. But for weekly, it is really not much going on because they both are very, very similar to each other. So if you want a sort of a good sentiment to trade right now, not really something I will pick. Okay, so I hope you find this helpful. Again, this is particularly helpful for people who just want to set and forget in a weekly perspective. And that's pretty much it, guys. I'll be back later on for a daily recap, but otherwise this is a weekly outlook for this week, February 13th to what was the date? 13 to 19 for the coming up week. Again, watch out for Jenny Yellen Speaks for this week. Will be a bigger mover, and we will see what's the outcome from Justin Trudeau and Donald Trump after today. Okay, I'll be back tomorrow with another daily analysis. Thanks for watching. Have a great, wonderful trading week. Thanks. Bye bye.